Good afternoon, everyone. Today is August 23rd, 2024. I'm Stephen Herwire, owner of Herwire Financial. After the market roundup, we will be talking about Roth IRA, traditional IRA, which one is better? Okay, IRAs. Keep in mind, IRA stands for Individual Retirement Account. That means there is no joint ownership. Which one's best, Roth or traditional? Answer is always the same. It depends. Your financial goals are a big part of figuring out which one's better. Sometimes having both varieties is a good idea. IRAs have designated beneficiaries. That means in the event of the owner's death, it passes directly to their beneficiaries. One must have earned income to contribute to an IRA or a Roth IRA, or if filing jointly, a spouse who has earned income. There's an annual limit of $7,000 or earned income, whichever is lower, for contributions. This is total. When I say total, I mean combined between Roth and traditional IRAs for everybody that's younger than 50. This is a per person limit. So you can put the entire amount in the Roth, you can put the entire amount in the traditional, or split it between the two in any proportion you like. And you don't have to put that much. If you're going to be 50 this year or older, you get to add an additional $1,000. Okay, so when can you contribute? Well, for tax year 2024, the window opened on January 1st of 2024 and will close next year on April 15th. Now, since it's generally important for whoever prepares your taxes to know about these contributions, it's usually better to do them before the finalization of your tax return. And by the way, if you're contributing in the first 3.5 months of 2025 for 2024, whoever you're making the deposits with, they need to be told that up front. Traditional IRA. Contributions may be tax deductible depending on your income and participation in employer-sponsored plans. In this case, taxes are deferred until withdrawal during retirement. At age 73, you have to begin required minimum distributions. Because here's the thing, Uncle Sam didn't get his cut when you put your money in. At 73, he's tired of waiting. Make at least your minimum withdrawals, pay taxes on them, or pay significant penalties. Roth IRA, contributions are made with after-tax dollars, so there's no immediate tax benefit. As long as you meet the requirements, when you're in retirement, you get to pull them out, so everything tax-free. And there are no required minimum distributions because Uncle Sam got paid up front, so he doesn't really care, as long as you're alive, about when you withdraw. You need to exercise extreme caution when making withdrawals prior to age 59.5. And I don't mean the year you turn 59.5, the day. Whether it's a Roth or a traditional, because there may be taxes and penalties. Okay, advantages of a Roth IRA. One of the most obvious ones is when you're in retirement and you're pulling money out of your Roth, you don't pay any taxes. This is beneficial if you expect to be in a higher tax bracket in the future. There's no required minimum distributions. We talked about this already. Contributions, not earnings, can be withdrawn at any time tax-free and penalty-free, and this includes before 59.5, which offers more flexibility for financial emergencies. Now, here's the one that's not so obvious. Withdrawals do not change your modified adjusted gross income, which I'll call MAGI from here on out. It's especially important if you're on Medicare or Social Security, because that will affect whether or not, the level of taxation on your Social Security, and it will affect whether or not you have to pay Medicare Part B and D surcharges. A Roth IRA will have no effect on it. Traditional withdrawals may. Advantages of the traditional IRA, there's an immediate tax deduction if it's deductible IRA. It's great if you're going to have a lower tax bracket in retirement. So this way you defer the taxes until you have a lower tax bracket. And if you have an employer-sponsored plan and you're eligible, you can actually put more stuff away. into the same amount in the traditional IRA, but overall, because you'll have a traditional IRA and a 401k, which will defer a lot of taxes. Okay, disadvantages of the Roth IRA: no immediate tax benefit. High earners may not be able to contribute directly to a Roth IRA. There is a way to do it for a high earner, but I'm not going to talk about that today. It all depends on your tax filing status and your MAGI. Married filing jointly, if your MAGI is less than 230 grand, you have no income related restrictions. Between 230 and 240, you do have some restrictions, and at 240,000 and higher, you cannot contribute directly to a Roth IRA. For single filers, those limits start at 146,000. If you're between 146 and 161,000, you can do partial contributions, and over 161,000 is no direct contributions. Note these restrictions do not apply to Roth or to 401k or other employer-related plans. These are 2024 numbers. By the way, if you're near the limit and you're contributing to a Roth IRA, exercise caution when doing things that may increase your income, like Roth conversions or pulling money out of a traditional IRA. Consult your accountant and your financial advisor. Traditional IRA. Once you get to retirement and you start pulling these things out, you're going to pay taxes on as ordinary income on every dime. 73, as I mentioned before, you have to start pulling out or suffer some penalties. The amounts that can be deductible depend on whether or not you and or your spouse are participants in your respective employer-sponsored plans. And if you pull money out prior to 59 and a half, you may be subject to penalties in addition to taxes. And as I mentioned before, withdrawals do change your MAGI. Very important if you're on Medicare and or Social Security. With the lack of availability of defined benefit plans, i.e. pensions, it's incumbent for each of us to save for our own retirement. Time is important. Save early, save often. You got to take into consideration whether the immediate tax benefit is more important than the benefits of having an account which is tax-free in retirement. Because keep in mind, $1 in a Roth account is worth more than $1 in a traditional account because taxes are due on the traditional dollar. Exercise caution when making withdrawals prior to 59 and a half, whether it's a Roth or a traditional, because there may be taxes and penalties. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to each individual situation. During your working years, are you saving enough, and is it in the right place? The sooner you have the answer to that question, the easier it's going to be on your wallet. When you're in the glide path to retirement, which I define as the last 10 years prior to retirement, will the USS retirement be shipshape on the appointed day? And in retirement, how do I avoid running out of money before I run out of life? And finally, legacy. Does what you worked hard for get to where you wanted it to after you're done with retirement? I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there is a need. If you'd like to schedule an appointment, you can click on the Schedule an Appointment button in the upper right-hand corner of my website. Want to see more videos like this? Go to my website and click on the YouTube button. It's the red one in between the Facebook and the LinkedIn buttons. If your friends want more information, suggest they follow me on Facebook, LinkedIn, Twitter, and subscribe to my YouTube channel. By the way, no Facebook Live next week, but following week, September 6th, we will be talking about inherited IRAs. The title of it is, I've inherited an IRA, now what? It's not as simple as you might think. Happy Labor Day, everybody. For those who prefer the telephone, my phone number is 518-631-2569. Do not text that number. You will be sad, I will be sad, because I won't get it. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance references historical and no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, No representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment in any investment. Investing in stock includes numerous specific risks, including fluctuation of dividend, loss of principal, and potential illiquidity of the investment in a falling market. Investing in mutual funds involves risk, including possible loss of principal. Fund value will fluctuate with market conditions, and it may not achieve its investment objective. The Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industries and widely held by individuals and institutional investors. The Standard & Poor's 500 is a capitalization weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of the 500 stocks representing all major industries. NASDAQ Composite Index is a measure of all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value, last sale price multiplied by total shares is outstanding, is calculated through the trading day and is related to the total value of the index. Are Wire Financial and LPL Financial not endorsed by or affiliated with the U.S. Centers for Medicare and Medicare Services or any government agency? Like I said, no Facebook next week. Everybody have a terrific day, a terrific Labor Day.